Good morning, Jags. This is Fahad. Today is Monday, July 27th. Very big move in precious metals continuing this morning. Take a look at gold futures. This is just remarkable. When it started to break out through 1810, I said that my short-term target is 1850. And then I saw the strength was still continuing. So I said, okay, my next technical target would be 1880. It went even beyond that. And here we are this morning trading at 1932 gold futures, that is. This is a very, very large move. And it's very heavy volume. It continues to power higher. If you go to the long-term scale, you'll see that we're basically just taking out all resistances one by one, whether you go back all the way to 10-year scale. And so another 1.8% move. And if you look at silver is up another 7%, nearly 7% this morning. Just a very large, strong move continues. And this time, the difference is that now the Bitcoin is also starting to participate. So that's why I shared that picture in Telegram yesterday. Just want to point this out because, I have always been reluctant to buy Bitcoin. In fact, I've never actually really taken a position ever because I've always been, curious about the strength, whether it will last or whatnot. But I think that there has been a small gradual reduction in volatility over the years, and it is becoming more and more acceptable form of another asset class away from fiat currency that is becoming a part of the portfolio. So something to take a look at. But if you look at this Bitcoin futures, Bitcoins is up 7% in a single session on heavy volume, and is starting to break out from a tight 3-month-long basing formation. And if you look at how this thing has actually set up technically, this move could be explosive. So I just wanted to briefly touch upon this in Telegram last night, where you see this massive breakout on the daily scale. And if you go to the long year, three-year scale, you'll see the significance of this. So here you go. Bitcoin this is. And so if this thing starts to run and it continues to hold decisively above 10,000 level, which was the critical level for quite some time, then I think next stop is about 12,000 to 13,000. Highly, highly volatile, something to keep in mind, but this is definitely on the move. A few days of consolidation above 10,000 level is going to be far more constructive for more upside to come. 12,000, 13,000, 14,000, such, basically following the same kind of run that gold and precious metals in general that have been enjoying. We do not want to see another fail above 10,000. That's the key over here, because there have been other attempts when this thing actually peaked its head above 10,000, and then within a day or 2 days, it failed and then moved back lower under 10,000. So watch Bitcoin. It is performing very, very strongly. Now, with that said, I do have two stocks, pure technical view and then some fundamental color. Both are setting up for a breakout. Ball Corp, BLL. Keep an eye on this stock. Ball Corp. This is one of the biggest providers of aluminum cans for the beverage industry. Now, previously, we have pointed out that there has been some upside call accumulation, leap call accumulation in this stock, particularly coming out of the March lows. We saw that this is a value name. So if you start to see further rotation away from growth to value, this should outperform with a technical breakout through $75 per share. And if that happens, I think this gets to about $80 to $82.50 in the very short term. So basically, I'm looking for about 10% move in the stock in this particular case. There's an interesting article that was published by CNN Business. Now, I rarely ever read anything from CNN Business, but this one caught my attention. And basically, this article talks about why America is running out of aluminum cans. And they basically go on to talk about the demand for the can was already strong before pandemic. Brewers increasingly turned the vessel during the past 10 years. Beer sold in cans accounted for 50% of all beer sold in 2010, 60% in 2019. But now what's happening, and you've got all these seltzer buyers that are out there, including White Claw and Truly, that have really taken the market. And you've seen the numbers out of SAM, SAM is the symbol. And as a result, there has been a surging demand of cans. And this is also the easy one where you've seen a lot of the changes in the recreational industry that is coming. So for example, You know, many people are opting to take vacations that are on the road, whether they are taking a camper out or your motor vehicle out, or basically going out camping. Similarly, you've seen the similar kind of demand that has come from boating, which has been very, very strong this summer compared to other kinds of recreational uses. And as a result of that too, there has been a surge of demand of kind of products that are not bottled but rather canned. And so there has been a surge in demand of cans. We have talked about some of these channel checks in the past as well, but just to give you some hint, uh, there is a supposedly a short-term shortage of 12-ounce aluminum cans in the country, with the consumption for fizzy beverages, both alcoholic and non-alcoholic, shift from restaurants to home, and people stockpile for the pandemic. This is both a short-term phenomena, and then on top of it, if we get into this whole climate thing after the election, then this could actually become a permanent shift that could last for quite some time to come. So while the demand for aluminum cans have always been in the growth, of only about 1 to 2% year over year, but the way we are seeing these channel checks that have come out, if they stick, then we could be looking at high single-digit percentage increase in the use of aluminum cans for the rest of the year, and then potentially continuing into 2021. So keep this in mind. The chart has a wedge formation. Let's see if it starts to take out through $75 per share. And if it does, we're going to see more upside ahead. And the next stock is a former top pick, PGNY. PGNY, I think that's how you say it. This is a former top pick from Jaguar Quarterly Outlook. And so this thing also has a nice technical setup for a breakout through $28 per share. So set up your alerts there. See if it takes this out, moves out of this VOP congestion level. And if it does, then I don't think anything is going to stop it until it gets all the way to new 52-week high. What's catching my attention on PGNY is channel checks that are coming out of Bank of America, in which they have a little bit of a neutral, read to it, but I'm reading between the fine lines, and they say that this is very well telegraphed going into the earnings, which is going to come out sometime on first week of August, that the reproductive specialists across the country saw a lot of shutdowns during the month of April and May. And as a result, there is no cushion that the second quarter earnings report is going to show a lot of headwinds related to those shutdown. But there's two things that you need to keep in mind. This is the kind of industry, the reproductive specialist and the services that they provide, where you cannot put off this kind of elective surgery procedure, elective procedures of any kind for a long period of time. There's a pent-up demand for that comes right back, and it snaps back very quickly. And so with the reopenings that have been taking place, even though there are still uneven shutdowns in the country, that snapback demand is coming back in volumes, and as a result, we're likely to see in the earnings report that comes out June being very strong sequentially, month over month, and then July, and as well as going forward for the third quarter and the fourth quarter to be also very strong. So as a result, we are starting to see on the street the third quarter revenues go up, going into the earnings from 325 million to 331 million. And then for the fiscal year 2021, we have similar kind of ramp higher from 549 million to 553 million. So full year revenue expectations are actually going up, even though the second quarter is going to be rather weak. So that's the first thing. And the second thing you need to keep in mind is that this company has very variable cost structure, which means that when the shutdowns take place, it does not have a lot of fixed cost structure on its books. So they don't get affected as much. It's pretty much 1-to-1 change between revenues and earnings. So profitability does not deteriorate faster than when the revenues deteriorate. And similarly, when the revenues are on the upswing and we're seeing a recovery, profitability snaps back and come back just as fast as well. And that's the beauty of companies that run a very variable cost structure. And so I think that if they end up raising guidance for the third quarter and the fourth quarter, when this earnings report comes out on August 5th, then I could see that the profitability snapbacks just as fast as well. So keep an eye with an alert at $28 per share. If it takes that out, I believe this thing gets into the low to mid 30s. That's it from me. Chronicle.
Morning. Hope everyone had a great weekend. Just previewing the next JaguarMedia Chinese tech episode that I'm working on. So in the last episode with Pinduoduo, we talked about the use of live streaming in e-commerce. This time we'll be talking about live streaming in gaming, with specifics focus on two companies, HUYA, symbol HUYA, and Douyu, symbol DOYU. So the US market is dominated by Amazon's Twitch, as we all know. Twitch has 37.5 million monthly active users. On the other hand, the Chinese market has two big players in the space, those two players being HUYA and Douyu. When this industry first started out, there were over 100 live streaming platforms that emerged within a couple years, and they were all forced to burn through piles of cash due to intense competition. And so, long story short, a lot of them died off while Douyu and HUYA came out the winners because of backing from Tencent. So, in terms of size, recall what I just said earlier. Twitch has 37.5 million monthly active users. Meanwhile, Douyu has 166 million and HUYA has 150 million. So that should give you an idea of just how massive this whole culture is in China. China is the world's largest gaming market with 650 million players as of the start of this year, probably higher now. And the live streaming market there is forecast to reach $3.3 billion this year, up from $2.5 billion last year. And together, these two companies, HUYA and Douyu, they make up just under 100% of the entire Chinese market penetration. So just like we did with Pinduoduo, we're going to be introducing these two companies and defining what they do and how they make their revenues. What are the things they do differently from Twitch? And we'll be covering all the relevant topics surrounding these companies, both the good and the bad aspects. And we'll also be taking a look at the cultural drivers behind their growth. And lastly, but most importantly, we're going to be talking about a potential upcoming major bullish catalyst for these two stocks. So we had lots of fun deconstructing Pinduoduo last week, and this next episode is going to be more of the same.
Sounds good. Sounds good. Looking forward to it. Great stuff, by the way, as usual on Jaguar Media. So this should be another one to watch. Twitch is so popular in the US, so it'll be interesting to see how China on the other part of the world basically has similar kind of dynamics in play with the largest gaming market and how they benefit from it and who are the biggest players and such. Good stuff. Looking forward to it. Jay.
Hey, Pod. So just want to talk about one of the names that was in yesterday's weekend research. That was Adtalem Global Education. Ticker is ATGE. This is another education company whose, the bulk of their revenue comes from their medical and healthcare segment. And within that segment, they have Chamberlain University, which is a nursing school located in Downers Grove, Illinois. Now, the reason why this name caught my attention was because last week on July 22nd, there were some unusual buyers of 900 August 35 calls for $2.75 offer. So nearly a $250,000 bullish bet. These most likely are going to cover the Q4 earnings report from the company. That date has yet to be announced, but that most likely is the catalyst. Now, this is a name that's not covered by many analysts, so there aren't a lot of checks out there. But if we go back and look at Q3, what we saw was that across their entire network, total new students were up 11.3%, while total enrollment increased 4.6%. And then when you look at the medical and healthcare segment, total revenue was up 1.7%, with Chamberlain University revenue up 5.4%, and new enrollments were up double digits for both the January and March session. Now, management did talk about and highlight how they have transitioned all of their medical and nursing students to its online programming with minimal disruption. And then even if you look beyond Chamberlain and their other universities within the segment, such as Ross University School of Medicine, Ross School of Vet Medicine, they talked about how they've transitioned some of their graduate programs to using telehealth. So a one to watch over the next few weeks as we get closer to earnings.
Does this education provider has any online presence when it comes to all of these courses, or mostly brick and mortar, basically similar to typical university levels?
It's a typical university level.
Okay. One to watch then regarding the enrollment and how, because I would be most interested in the upcoming earnings report, exactly what do they have to say regarding how they're going to transition to online model, and if that is having any kind of impact on their attendance, fees, and all of those metrics from students. Now, the good thing is that the education industry in general is a counter-cyclical in nature. If you ever go back to any kind of other recessionary periods, whether it was 2008, 2009, or 2000 to 2002, when you have a very high unemployment rate in the country, there tends to be a pickup in people, more and more people wanting to go to school. And as a result, the education sector tends to outperform while the unemployment rate is high. In fact, we've also seen a bit of a shift where more students tend to actually stay on after they're done with their bachelor's degree to continue on their master's degree during the period of recession, because the job availability is scarce and it's not easy to find. So they just continue to on and take on more. This is a very normal trend that is usually emerges during the recessionary period. But this time it's different, just in the sense that naturally education is being impacted by COVID. I think these numbers are very, very impressive looking at the first quarter beat and such, but I'd be most interested to see what they have to say about the upcoming fall semester in terms of student enrollments.
Yeah, and one thing I would just add is that if you go back to 2019, I don't have the current numbers. So 2019 for the medical and healthcare segment, it was divided up 45% campus and then 55% online.
Okay, yeah, so that's a very good metric. So that's nearly half and half. So that's a very good metric. And I'm assuming that mix is going to change even more with more becoming online and less. So that becomes healthy. Technically, this also, you have a nice chart here that looks great, because if it starts to break out through 37.50, there's an air pocket above it on the weekly scale, all the way to about $43 per share. So on a percentage basis, this is also about 10 to 12% move. Good stuff. Avo?
Morning, everyone. On the radar today, I'm looking at Square. There was they report next week, about 9 days from now. We haven't seen an overwhelming amount of option calls go through or anything like that, but the September 100 strike has seen a couple of $1 million of accumulation. I think December 135 as well. I saw some flows go through recently. In any case, there was a note out by KeyBank last week talking about their cash app adoption curve, which keeps increasing, and the growth rate in June was 130% above April-May levels, which were also above previous levels. Now, this doesn't 100% correlate with growth, but it is an indicative of adoption of interest, and has turned into increased use of everything in the past. In itself, the Cash App, this segment that it reports in, is only about 22% of the overall revenues, but it's also the fastest growing one. So between now and next week, I'd like to see some more channel checks if they come out. Of course, they're not gonna do this just for me, but this is something that I'm keeping an eye on. Hopefully it might present an entry before the earnings. I see it's up about 1% today with the rest of the market. That's it.
Yeah, so I have been seeing consistent accumulation in Square as well, and I think there is no question that when the earnings come out, Cash App is going to be the shining star, basically in that earnings report in so many levels, and the company is going to talk about a lot about that. But realistically, I will just tell that this stock is up 100% in 3 months since it reported last earnings, 100%. And this is not a small move. This is a massive move. And a lot of that optimism is somewhat baked in. And recently, we've started to see a break in momentum in growth names. We've started to see a lot of cracks, a lot of rolling over, a lot of fading action. Last week, I also mentioned that if you look at across the board, a lot of the tech stocks that reported decent earnings, Microsoft, Texas Instruments, Teradyne, you can just go down the list. Many of them saw the prices actually fail and fade. If they gapped higher, they fade right away. Otherwise, they simply gap down after earnings come out. So there's a bit of a sell pressure on the tech names. So that would be my only concern in Square. Otherwise, fundamentally, clearly a great company, and I think that Cash App is going to be a pretty strong. So, but I would just prefer, for my personal view, I would prefer for a further pullback, maybe down to about 100 level, before stepping in and getting more constructive on the stock. All right, thank you everybody for joining. I hope this was nice and some setups to keep an eye out. We'll see you in the chat room shortly.